Having studied second normal form, we're now about to move on to the third normal form. So let's get started. So the definitions of third normal form look very, very close to the definition of second normal form. From the Murak side, second normal form was every non-key column must depend on the entire primary key. And for third normal form, they state that every non-key column depends only on the primary key. So a couple of differences here. One of them is the entire primary key, which means that in second normal form, you're looking for composite keys. If you have no candidate keys that are composite, then you do not have to worry about second normal form. You're automatically there. Whereas third normal form doesn't talk about the entire primary key, it just talks about the key. So that's one difference. The other difference is this has the word only. So those two are pretty close, but I prefer the definitions below. You've seen the one on second normal form. And now I want to talk a little bit about third normal form. A table is in third normal form if it is in second, and every non-prime attribute, and we know what those are now, is directly dependent on every candidate key. So I bring in the same two differences here. In second normal form, we talked about proper subsets, but here we're talking about the entire candidate key. And then I also bring in the word directly. And these two differences are going to drive how third normal form is different from second. As a reminder, it is good to understand the different levels of dependency. So let's talk about dependence. This is our employee department table. It's not good, it's not normalized, but it does represent a good example for us to try out dependencies. So if we look at this, the Social Security number is the key of this table, and then everything depends on that. And by dependence, we mean that there's only one answer for every Social Security number. So if I have a Social Security number, there's one employee name, there's one birth date, there's one address. There's also one department number. There's also one department name, because employees can only work for one department in this. And there's also one Social Security number for the department manager. So we would say that all the other fields are dependent on the Social Security number. But what we need to figure out is direct dependence. And as this diagram indicates, there's direct dependence of the employee name, the birth date, the address, and the department number. They directly depend on the Social Security number. But not so these two fields. The department name and department Social Security number, yes, they depend on the Social Security number, because if I know that, I know what the department name is, and I know what the department manager's Social Security number is. But it is not a direct dependence, it is an indirect dependence, because they are more closely dependent on the department number. Once I have a department number, there's direct dependence to the name, and there's direct dependence to the manager's Social Security number. So in third normal form, we're going to look for direct dependencies. And now we're reminded about what those are. This is an accounts payable system that has invoices and line items for those invoices. It looks like it's in first normal form because all the fields seem to be atomic. We're not repeating any fields. So we'll give it a first normal form pass for both tables. Second normal form looks good too because the key of the invoices table is the invoice ID. And the key of the invoice line items table is the invoice ID and the invoice sequence. They're the only possible candidate keys. And so, therefore, second normal form automatically applies. But what about third normal form? Is this table in third normal form? To look at that, we need to look at direct dependence. And it seems like it might be in third normal form, because what else would some of these fields depend on? But that's only because there are some missing columns in these tables that we didn't think of. We'll go through them one at a time. So let's take a look at these fields and let's try to determine which fields really truly belong in the tables that they're in. So for the invoices table, there are some things that are very specific to an invoice. Its invoice number, the invoice date, the invoice total, probably also the payment total when you pay an invoice, the credit total for the invoice, certainly the invoice due date, maybe the payment date. So I'll just highlight those in yellow. They're the ones we're pretty sure belong in the invoices table. How about the line items table? Well, certainly all these line items belong there. An invoice ID and a sequence number will define a line item of an invoice, and they'll have a description, a quantity, a unit price, and an item amount. So this will give us some of the obvious fields that we think directly depend on their primary keys. The next thing to notice in the invoices table is there's a lot of vendor information. There's the address, the city, the state, the zip code, the vendor's phone, their contact's first name and last name. And maybe all of that information can be determined by vendor name. So maybe vendor name determines all that. Or maybe a vendor name is not unique. There might be a hidden field like a vendor ID there. But if we think about this vendor information, we could have multiple invoices from the same vendor. So does all this vendor information, does this really depend on the invoice ID? It probably depends more on something different, maybe like the vendor ID. All of those vendor fields are directly related to a vendor name or a vendor ID, and only indirectly related to the invoice ID. Now it turns out this is why modeling is so important. If we had done an ER diagram and we saw that an invoice is invoiced to one vendor, but a vendor can have many invoices, we never would have mixed vendor attributes and invoice attributes into the same table. So the combination of good modeling and good normalization should yield pretty good tables. But these purple fields, they have to go. They're violating third normal form. Does the vendor information depend only on the invoice ID column? Another way to phrase this question is, will the information for the same vendor change from one invoice to another? If the answer is no, the vendor information should be stored in a separate table. That way, you can be sure that the vendor information for each invoice for that vendor will be the same. And you will reduce the redundancy of the data in the invoices table. When you read the example in the book, it talks about these terms, and it implies that the terms can be applied to an invoice, and that so each invoice can have a set of specific terms. And a set of terms can be reused for different invoices, so that's why you have the multiplicity of n on this side. But then they also say that vendors themselves can have default terms. So a vendor will have, one set of default terms, but that set of default terms can apply to multiple vendors. So again, here, if we had just drawn the ER diagram, we never would have put terms into this invoices table. We would have recognized that because it is in its own entity type, it should be in its own table. So we will correct that mistake as well, although it's difficult to know just from inspection of this table without any other details why terms would be an issue. Again, this is why it's really important to talk to your business users and ask them lots of questions about your application. As we read more into this problem, we learn that the same thing is true of account number information, An invoice can have a default account number to which all line items would apply, but that could be overridden at the line item level where you could have an account number there specific to one line item. But again, this should have been found in modeling when you talk about an account number associated with the whole invoice and sometimes an account number associated with a line item. That would have cried out to make account an entity type that would be in a relationship with both the invoice and its line items. So the real third normal form representation looks like this. Notice that the key things we did was we took all of this vendor information, which was previously in the invoices table. Those were non-prime attributes that were not directly dependent on the invoice ID. And so therefore we removed all of those, put them in its own table, and while we were at it, we decided to give it a vendor ID as probably an auto-increment simple numeric primary key. And so with third normal form, the main thing we did was to remove all those vendor non-prime attributes away from the invoices table into a table of their own. The rest of the changes with terms and accounts really has more to do with database design than it really does with normalization.